Hey guys, so now we're going to talk about video 2, about risk management and this position size calculator tool that I've come up with. So a few things. I'm actually going to exit the PowerPoint and show you. The first thing I want to talk about is just leverage in general. So if you guys haven't traded futures or anything with leverage before, basically spot is kind of what most people are used to. It's where if you only have $1,000, you can only buy $1,000 worth of Bitcoin or Ethereum or something else. Futures use what's called leverage. It's basically amplifying your buying power. And I'm going to kind of go through an example to show you how that works. So say that you were taking a trade for Ethereum at $1,000 entry price on a long trade. You're expecting the price to go up. Your target for the trade was 1,300 and your stop loss was at 950. So if you're taking this trade on a spot account with $3,000, your position size would be the $3,000. In this case, that would be like 3 Ethereum, like 3 times 1,000. And the stop loss distance would be 5%. So if it moved from 1,000 to 950, you'd lose 5%, and that would equate to a $150 loss, just 5% times 3,000. And then if it hits your target, your 3,000 would turn into 3,900, so your profits would be 900. And all of this is totally on a spot account. You could totally take this trade. You just need the full $3,000 in order to do it. The nice thing with leverage, so say for instance you're trading on a futures account using a 10x leverage, you would only technically need $300 in your futures account to take the trade, since it gives you 10 times the buying power. So this $300 would be able to buy up to $3,000. So again, you only need 300, but you'd still be able to buy the full 3 Ethereum position, and all of the outcomes would be the same as well. So if it went down to 950, you would lose the $150, and if it went up to the 1300, you would gain $900. And really the only difference here is in this first case, even when you were profitable, it was less than 30%, $900 over 3,000 is less than 30%. But if you took this trade and were successful with the $300 account, that's like a 300% return. So, but also on the flip side, if you were to lose, this is obviously a 5% loss on a $3,000 account, but if you lose $150, that's a 50% loss based on your initial 300. So long story short, leverage magnifies both gains and losses, but if you use proper risk management, it can be a really powerful tool. A lot of people, when they see someone using like 50x leverage or something, say, oh my gosh, isn't that so risky? And yes, of course, it can be risky if you use your full portfolio at a 50x, but most often what people actually do is say that you have a $1,000 account and you only put $300 into what's called margin that's being like used to buy your position. So you're only using like a partial portion of your total funds for each trade. You usually don't do like the full portfolio. It's usually you're using leverage to get increased buying power, but you're only using like a small portion of your portfolio. So this is just kind of a quick example about how leverage works. And again, just magnifies both gains and losses. The important thing I wanted to talk to you guys in this video, I guess the first of them, I've shared this infographic in many places, and I've got it in my PowerPoint as well. But the most important thing, you can ignore most of these patterns. I'll actually go over them more in the next video. But the important thing I want to show you guys is these red and green boxes. So these are basically kind of the position setups, I would say. So typically you see where the green and the red box intersect. That's kind of like an entry point. The bottom of the red is usually where someone like puts their stop loss. Like if the price goes against them down to that level, they'll kick out of the trade and just cut their losses. And if the price goes up to their target, the top of the green, they'll take profits. And the thing that you'll see throughout this entire infographic is the green rectangle is typically much larger than the red rectangle. And that basically means if they are right on this trade, they will make more than if they're wrong. And this is a really important mathematical concept, because the key to consistently being profitable with day trading is to have your winners be bigger than your losers. So say, for instance, I only take trades where if I'm right, I'll make 2 times as much as if I'm wrong. And so the math works out. Even if I only have a 33% success rate, I'll break even at minimum. If I'm only right half the time, I'll make money. Just because my winners are bigger than my losers. The biggest problem that a lot of people get into with leverage trading is they get emotional and don't follow their risk management system. And instead of this situation playing out, they'll have some big losers that are bigger than their winners, and that's when people get in trouble. So it's really, really important to use proper risk management, and I'll actually show you on a chart. So this is BitGet. I also wanted to show you guys something real quick. Dark mode is something a lot of people want to know how to use. So if you're on the desktop, just go to the BitGet logo sign and click this sun or moon icon. You can get to dark mode. I think on the mobile, you click your account little profile button, and same thing, click the little moon icon. So I'm going to go back to the demo account and show you guys how to how to basically pull up that position, set up the green and red boxes. So all of these little tools on the left are the same thing that you'll see in TradingView and other charting platforms. So you can draw trend lines. You can, if you click the little toggle to the right, you can draw horizontal support and resistance lines. There's also this cool magnet tool if you're drawing a trend line, for instance, and you want to make sure you get it exactly. You can click this magnifier and it'll drop it exactly to the candles, which is cool. But the one thing I want to show you, so this toggle down here, you can do a long or short position. So I'll show both examples. So I'm not really going to pick on any specific price, but let's just say I wanted to enter a position around here. So you click long position, and then click the chart. And then this middle arrow, or this middle dialog, you can move to where you want to enter your position. This bottom one, you can move for your stop loss. And this top one, you can move for your profit target. And the cool thing with these is it'll actually calculate your risk to reward. I need to zoom in a little bit, but you see right here, just based on how I've drawn it, it's a 2.18 if I entered here and held it up till there. So if I'm right, I'll make 2.18 times as much as if I lost. And you can see that with the percentages as well. This is 12% return versus losing 5.5. So that's how you do a long position. And if you wanted to do a short position, say you wanted to do the same thing right here, you can drag the bottom to where you want your take profit to be, the middle point to where you want your entry to be, and the top to be where your stop loss, because a short, you're expecting the price to go down. So this is why the green candle is going down this time. And same thing, I only take a trade if the risk to reward is at least a 2. And so that's just how you draw those on the chart. And then I really want to talk to you guys about this position size calculator. So in Metaverse HQ, early in October, I pulled together this tool. I was actually trying to make my personal trading more systematic. And so I came out with this tool, and I'll share a link in the PowerPoint as well. But I have this Google that's public. As long as you have the link, you just need to download a copy of this to modify it yourself. But basically what I have in this tool is a series of trade ideas that you can update to whatever makes sense to you. I have some examples on here. So high conviction trade, maybe this is a trusted trade caller that you follow, or a third touch of a major trend line or channel. Maybe there's an idea that you have a pretty good feel, pretty good confidence it'll work out, but maybe not quite as much as these others. This would be like a support and resistance trade in line with the trends, continuation trade or something. And then same thing, as you get trades that maybe you're less and less confident, but you at least want to try them, you can add those in. And so once you update these with all the different kind of trade ideas, you can basically update all of these highlighted fields to toggle between any of the trade ideas. So say that you updated this to trusted trade color. You can then go to this drop down, it'll update automatically, and you can toggle to whatever. Undo that because it's a template. And then you put in your account value, the max percent you're willing to risk per trade. I typically recommend people start with 0.5%, sorry, 0.5 starting out, just because when you're early starting out, you're likely going to have a pretty low success rate, so you want to just risk low amounts until you build up your consistency. I personally use 3% right now, but I really wouldn't go over 5% for any trade, even once you figure it out. These next fields down below, and again, this is just simple calculation. Account size times max risk is if the trade goes against you, this is how much you'll lose. And the cool thing with these scalings is it will scale down the risk based on your confidence. So for a fully confident trade, I'd lose 150 in this example, but if it was only a 50% confident trade, it reduces the size down here so that my max risk would only be like 75 in that case. But anyways, so put your account size, the max you're willing to risk per trade, and then these fields down here are the average entry, the stop loss level, and the target level. This is kind of what we talked about, this green setup essentially. So the entry is kind of this midpoint, the stop loss is where you would cut out of the trade if it moved against you, and the green target is where you would mainly look to take profits. And so once you update all three of these fields, it'll calculate the risk and reward for you. And again, I only take trades if it's at least a 2x risk to reward. So if it's not 2x, like I don't even take the trade. And then it actually calculates you the max size for this trade. And I just want to clarify, this is number of coins, not dollars. So this was like an XRP example. This is 50,000 XRP, not $50,000. So the next thing is you can actually use this tool to track your trades, which I also think is really important. So you can put the coin, the type of trade ID it is, the scale is basically what outputs right here. I can update that scale. You can pull these two in here, the size, which is like how many coins the trade used, your entry, your take profit, stop loss, and then the outcome is how much you made or lost from the trade, and any relevant comments. I also have a field over here that automatically calculates whether or not the trade was profitable, so over time you should be able to just see how you're doing. And I think this is really important. I'll actually pivot and show you guys my personal position size calculator. So I've been using this, like I said, since early October. And you can see I'm going to go over more of these examples in my next video, so I don't pay too much attention to these. But I think this tool is really important because it really forces you to think like, what is the actual trade setup that I'm looking at? Instead of just going off a gut feeling, you have to think like, why is this actually a good idea? What kind of trade setup it is specifically. And then obviously the risk management is super important as well. And I'll show you guys my trade tracker as well. So like I said, I've been tracking this since about early October. I've been at this quite a while, so it's taken me a while to get some consistency, but I've generally had the right idea about 80% of the time, and my profit percent has been a little bit variable. I have like good weeks and bad weeks. Like this first, I think this was the first like 3 weeks of October, I actually lost some money, but overall, like I've found some pretty good consistency. Up about 30 grand since I started, which is I think somewhere around 60% return on the money I was trading with. But that aside, I've kind of really used this tool a lot to help me fine tune, especially these comments. I noticed that there was 1 week where I was, I can't even remember where I put it. I was I was closing things too early. That was like one thing I was really noticing. I think this was back in November. And so that's just like, I think it's really helpful, these comments, to kind of figure out what's going on and what you can improve over time. And these other fields in column H through K are a little more advanced. At this point, I'm trying to fine tune my take profit and stop loss, so I've added a couple additional fields for me, but you can ignore those for the most part for you. The most important thing is just tracking your profitability over time in comments. And really the last thing I wanted to go over for this video is I put together this kind of blueprint that I shared in Metaverse HQ that I wanted to kind of mention here. So Effectively, my blueprint for learning how to day trade is going through all these videos, including the practice exercises in video 3, paper trading for at least 1 month while you practice, because you're definitely going to lose money, and so you'd rather lose fake money instead of your own. Slowly start to trade with real money. Like I said, starting out risking very low percents, like maybe 0.5% per trade, and then make sure to use my position size calculator tool and only taking trades with good risk reward setups. Initially, like I said, you'll have a low success rate and lose money, but hopefully it'll be fake money. And then the next step that most of you, will start seeing is that you'll start generally having the right idea about a trade, but your entry, stop loss, or take profit won't quite be right, or maybe you'll have some difficulties with your emotions executing it properly. And then eventually you should start seeing your success rate increase and seeing consistent profits, so you can start scaling up your risk. But again, I wouldn't recommend risking more than 5% per trade. Ultimately, day trading is a skill just like anything else. You just have to put in the work and go through the education and practice to refine it over time. And while it is a little bit difficult to do part-time, it's definitely something that can be done. So yeah, that's pretty much it for the next video. This next one's going to be a great one, kind of going over all the different setups I look for. So talk to you in a bit.